Good day, traders, merchants, vagabonds, and thieves. Welcome to this video. We're going to look at natural gas today. So I wasn't going to update today because so little has happened since we last spoke, but let's do it anyway. Spend a couple of minutes here. This is the natural gas 4-hour chart at Black Bull, reflecting the Henry Hub price on the new front month, the April month. And you can see how we're just getting squeezed into the apex of this falling wedge pattern, which is a bullish reversal pattern. We're right at the bottom of the pattern now. The RSI is almost oversold, not quite. Let's zoom in a little bit and have a look at the candles. You can see a couple of star doji candles forming here on the line, but we could also squeeze a little bit further down into the apex and the black support line below us. So that could look something like this. Let me try and draw sort of a path out for you, and also allow for a sharp clear out down below the level to clear out any liquidity that might be trapped there or wanting to get trapped, and then a sharp bounce out of here. So that's the sort of path we could expect if we don't move up from where we are currently trading. This 4-hour candle right here has got a bit of time to go before it closes. About 2 hours from now, in fact. And also notice on this 4-hour chart, the 20 and the 50 and the 100 and the 200 period moving averages are all stacked above us. Once again, we must remember we've still got weekend gaps, 2 of them which remain unfilled, which may need to be filled. And we have a big contract roll gap to the left-hand side too. So I'm going to allow for this to drop down to 2.8 or 2.7 and maybe faff around into the bottom of this wedge pattern and then bounce out. Watch for bullish RSI divergence on this chart down here. And that would look like lower lows on the price chart, but higher lows on the RSI. But generally, looking at this in an expanded view, it looks quite good to me. We're right near the bottom of what I expect is the sort of nominal range going forward. Between, say, roughly $3, allowing for spikes down to $2.70, and about $5, allowing for spikes up to $6. So currently, we're right at the bottom of the range, probing down into a bullish reversal pattern with a pretty oversold RSI and a pretty dead market, dying its death just before the contract rolls over later on today. Volume has obviously dropped off today until the futures expiration later on today, and so it'll probably be a fairly quiet day. It doesn't mean we might not get a sharp short squeeze ahead of the rollover though. Sometimes that does happen. We only have to look to the left-hand side to see where that's happened before. So in summary, I remain long, looking for a bounce out of here, allowing for dips down to 2.8, 2.7, probably not much below that, if at all. I've just added one more long tranche here at the bottom, as indicated by this arrow, and I'm hoping for a bounce out of here, hopefully not following this green path, but rather something a little bit more direct up into that next order block. Let's make this one doubly thick because it's our preferred path, and we'll make it purple because purple is the color of royalty. So take care, everyone. Make sure to like and subscribe to the video, and I'll see you in the next one.
That trade mate, grab that range. Couple old days later, watch that trend change. Hey. I'm swing trading in the outback, mate. Dust on my boots, still checking that rate. From the city all the way to the red plain flat. Turn a quick flip, then I kick way back. I'm swing trading in the outback, mate. Melbourne tongue with a desert state. If it dips too hard, I just call that fate. Then I jump back in when the odds look great. Yeah. Stubby in the S-key chart in my hand. Telstra bar blinking, hope it'll stand. My Baru's watching while I set my stop. If this candle